Off its rate fears. That's our top story today on the Wall Report. I'm your host, Greta Wall. Q4 earnings season continued today with more big banks reporting ahead of the open this morning. Bank of America shares are up more than 2% after the second biggest bank in the U.S. beat profit expectations at the end of 2021, but revenue did come in just shy of estimates. Bank of America's profits were boosted by the release of $851 million in loan loss reserves. The lender said Q4 was the lowest loss rate for loans in more than 50 years. The market was pleased with Bank of America's expense increase compared to its competitors. The bank said its non-interest expenses rose just 6% year over year, sharply lower than both JPMorgan Chase and Goldman Sachs. And it's the same story for Morgan Stanley as well. Shares are up today after an earnings beat and slight revenue miss. Morgan Stanley's profits rose more than 9% year over year, and expenses were basically unchanged compared to a year ago. Compensation cost came in at $5.49 billion, $500,000 shy of analyst expectations. The other big banks reported way higher compensation costs than expected. Morgan Stanley's CEO said the bank posted record high revenues in 2021 as assets in its wealth management division soared to $4.9 trillion. And big banks weren't the only reports the market was eyeing this morning. Consumer goods giant Proctor Gamble also reported ahead of the open. P&G beat expectations on both the top and bottom line in Q4. The stock is up more than 4% after the company hiked its full-year sales outlook. Procter & Gamble said price hikes on its products helped offset higher commodity and freight costs. The company has already implemented price increases on 10 product categories, including baby care, feminine care, adult incontinence, family care, home care, hair care, grooming, oral care, and skincare. Well, what's left at this point? They say more price hikes are on the way. Procter & Gamble said it has already told retailers about higher prices for fabric care products like laundry detergent and dryer sheets. Those are expected to be implemented next month. The company is now expecting organic sales growth this year between 3 and 4%, and that's up from the previous forecast for sales to rise between 2 and 4%. Now, those earnings beats did help push Wall Street higher at the open, but all three major indices have since fallen into negative territory. The Nasdaq is now down more than 10% from its all-time high back in November. That puts the tech-heavy index in correction. Tech stocks have been hit hard by rising Treasury yields as the market prepares for the Fed to tighten. Those yields are falling slightly today, but still holding near the highest levels seen since before the pandemic. Now, the economic news of the day is centered in the housing market. The Census Bureau reported today that new home construction rose unexpectedly in December. Housing starts jumped 1.4% to a seasonally adjusted annual rate of 1.7 million units. That marked a 9-month high for starts and beat expectations for a decrease. Now, multifamily builds made up the majority of that gain, surging 13.7%. Single-family starts, meantime, fell 2.3%. And it looks like this trend will continue. Overall permits for future home building surged 9.1% last month, but that was thanks to a nearly 20% gain in permits for buildings with 5 or more units, multifamily, while single-family permits rose just 2%. Now, the increase in multifamily projects is welcome news for renters who are being squeezed by higher rent prices due to low supply. But buying a home is expected to get more difficult as rates rise. Shares of the major builders are down today following a downgrade from analysts at KeyBank. KB Home is leading that drop, falling more than 4% so far in today's session. Builders are already struggling with high material and labor costs, forcing them to raise prices on homes. But buyers are also being squeezed out of the market due to those high prices. Low mortgage rates have helped those buyers bridge that gap, but that boost doesn't look like it'll last much longer. As the 10-year Treasury yield has risen in recent weeks, so have mortgage rates. Data from Mortgage News Daily shows rates hit their highest levels since March of 2020 last week. The average contract rate on a 30-year fixed-rate mortgage rose to 3.64%, up from 3.52%. The average 15-year fixed rate also rose to 2.95% from 2.73%. Both are sharply higher than the sub 2% rates that were seen during the pandemic. So far, though, these higher rates have not totally scared off buyers. Mortgage News Daily says application volume jumped 2.3% last week. That was driven by new purchase applications, though, as refinance activity tumbled 3%. Refinance applications are down nearly 50% compared to a year ago, when ultra-low rates spurred a surge of refinance loans. And before I go, let's take a look at United Airlines as the company prepares to report earnings after the close today. Shares are trading about 2% lower ahead of those results. Be sure you're subscribed to my Coffee with Greta newsletter. There is a link in the description box to get all the details about that report and tomorrow morning's earnings as well in your inbox before the market open tomorrow. I'll see you all back here for the Wall report tomorrow at noon. Hit that subscribe button before you go, and be sure to give this video a like to tell YouTube you want to see more.